Hi guys, it's Thomas here from COTbase.com. Welcome to a weekly COT review. Today we're going to be analyzing the 32nd Commitments of Traders Report of 2023, and as we always do, we shall start off by looking at the largest changes in commercials net positions. Before we jump to the review, just a brief reminder for everyone who is new to COT analysis. Here at COTbase.com, you'll find a lot of educational material, a lot of examples. We have all these in written format, but we do have some very useful videos as well that can guide you through the analysis process. So back to the review, and starting off with our first market, which is copper. As you can see, it's on top of our list. We are, of course, analyzing recent changes based on a 52-week look-back period. So we measure this recent change to the past 52 weeks of data. We are, of course, analyzing the classic COT report type. We have a couple different COT report types, but the one that is most commonly used and has the longest history of data, it is the classic, or as CFTC, the publisher of this data, calls it legacy data. We are analyzing futures and options, but of course at COTbase.com you can look at only at futures or only at options if you'd like. So let's get started and open up copper here, where we have a 37% change in commercials net positions, 36 as you can see in large speculators. Let's jump to the 1 year's chart. Here we go. You can see that recent change on the chart being probably the largest, or definitely top 3 of changes that we see on this this chart over here the past 1 year. It is a bullish COT change signal. It is coming after 2 weeks of declining prices, so that actually is a good signal, the one that I'd like to act upon. These COT change signals offer short-term trading opportunities, and because the data is showing Tuesday's snapshot of markets of traders' positions, and we get these, of course, on a Friday. It's good to see that there's no reaction yet, just after we witness and understand what the data is telling us. So this is suggesting some strengthening in the next couple of days. Moving to the 5 years chart, just to have an understanding of the extreme situation. And if you look at this current reading of net positions, both for commercials and large speculators, you can see that we're more or less in between the two extremes, so not an extreme to talk about. So we can actually move on and see if there's something more exciting in wheat. Of course, we have 3 different wheats. We have the Kansas City, the Minneapolis, and of course the largest of them all, the Chicago wheat. This is the Kansas City wheat, 30% change over here in commercials net positions. Once again, bullish change signal, larger than average, maybe not as large as the one we had in copper. But it is coming after a decline, and it does suggest we should see a bounce in prices upwards. Moving to the 5 years chart, we can see that here we are once again, or more or less in between the two extremes, so not a COT extreme to talk about. I am going to jump over the Minneapolis wheat because obviously there's a significant correlation between these markets, and I just want to jump to one of my favorites, silver. Here we have a 26% change in commercials net positions, a bullish change signal, 35 in large speculators. However, we have a 38% change in small speculators, and of course that is a bearish sign. So we have conflicting signals. Nevertheless, the fact that it's silver has been declining the past 2.5-3 weeks is possibly a good risk reward opportunity if someone is interested in taking this bullish change signal from commercials and large speculators. But keep in mind, small speculators have been excited about this decline. That's usually not the best sign that we like. It would have been nice if they've dropped their net positions, but that's not the case. Moving to the 5 years chart, let's see what the extreme analysis tells us. There's no significant extreme. We are gradually, as the decline is unfolding in the past couple of weeks, we are, of course, not surprised to see traders moving towards their bullish extreme positioning. Moving on to large speculator COT Extreme, we have two markets from last week, Palladium and the dollar index, still in the top three. Cocoa has been changed with rough rice. So let's just have a look at these markets for a second, but of course I will not dig into any depth of analysis. You can just have a look at my recent review. So bullish extreme over here, suggesting of course a bottoming in this market in the next couple of weeks or maybe month ahead. These extremes can of course be in the market for many weeks, month before the market reacts to them. Rough rice, bullish extreme, suggesting higher prices to come. And then the dollar index, of course, still in this 109 report, roughly 2 years. Bullish extreme can easily grow to greater levels, but it is an extreme that suggests further strengthening. And I will move on to our wonderful iCOT intraday indicator with AfterSignal, our indicator that we developed after many years of research, bringing you the concepts of COT analysis down into the shorter term trading arena. This is a 4-hour candlestick chart of the euro US dollar, most popular currency pair. You can see how well the system is signaling this top over here, and actually you get the ability to be in this trade for quite some time. Moving to a 1-hour candlestick chart, here you can see that again, our strongest signal type, the stripe signal, where we combine or say that we have two of our major signals acting at the same time. Under indicators, you can actually have an understanding, go into learning about this indicator. I'm just coming here because we have a great chart, an example chart with explanation what kind of signals we differentiate. We have, of course, speculators and commercials underneath the chart. Once again, this is not data from CFTC. It is our own data that we created. But as you can understand, it is very similar in concept. So we are measuring stresses in the scores underneath. And when we have a significant extreme in speculators, the green line, we signal that we show that with a changing of the candlestick color itself to blue. And when we have commercials at an extreme, we get a yellow diamond above the candle if it's a bearish signal, below if it's a bullish one. And of course, if we have both of these at the same time, supported by this gray balance line underneath, then of course we are talking about a strong sell signal or strong buy signal, represented with this vertical stripe, this line, we call it a stripe signal, and that's what you can see on the charts over here. So a very useful tool for anybody who trades a shorter term and is not necessarily happy with a weekly data that, of course, CFTC publishes. Then here you go. I'm showing you this is a 30-minute candlestick chart, but I mean we can go down to a 1-minute chart as well. A very useful tool, I believe, that can very well supplement the longer-term analysis that Commitments of Traders Analysis gives you. There's a lot to do here at COTBase.com. Of course, these reviews are short and brief, focusing on only a few markets, but of course you can look at all market categories if you become a member. You can dig into a specific currency if you want to. Any market. We have, of course, a wide variety of data. You can download if you are a pro member. We have a pro subscription offering you everything you see in these reviews, so the website access. But above that, we have a indicator developed on NinjaTrader that you can use all these tools. And of course, I talked about the iCOT having a basic version. The one with AfterSignal adds those points in time where you can enter the market. Very, very useful tool. Thank you very much for your attention. I hope you enjoyed this review. I hope to see you in my next COT review. Until then, take care and goodbye.